Welcome back, everyone. Here we go for another episode of Bitcoin and Altcoin Trading Talk. I'm your host, Joe, here with Coinigy, and I'm with the lovely Mr. Brian Beamish.
Well, I'm more handsome than lovely, but
And I'm with the
okay.
handsome Mr. Brian Beamish. How you doing tonight, Brian?
I'm good, and super excited to talk markets with you guys tonight, using the Coinigy platform, and maybe talk a little bit about some of the different tools, and actually one lecture video that I did for Coinigy, we were even talking about earlier tonight. We could make direct reference to it on a Bitcoin trade that just happened, and how you can use these awesome tools to kick butt in the market using the Coinigy platform. Woo!
Exactly. So he's referencing the chaos theory. So we're gonna dig into that tonight. So we got a full schedule here for you guys. Looking forward to it. Um,
Yeah. Hopefully a little less promotional shill from Brian. Sorry everybody for last week. I watched the video later on. I was like, oh my God, it kept going on and on and on. But
well, there is
uh,
the link in the description to enter your free chance to win Brian's course. So be sure to sign up for
yeah,
that.
just I mean, let's just get it. You can. Is this actually the link? Join. Okay, yeah, this is Coinigy. There it is. Enter the raffle to win a free spot in the upcoming term. Our next school term starts in about 25 days. And if you don't win and you're just curious about what we do here at TRI, I think this is a really nice platform to tell you a little bit about some of the users that have gone through the school program and what they've taken out of it. Let's leave the shill at that, okay?
Sounds great.
And the links, right, we go. The links in the comments are down below. Click the like button, subscribe, and
Like and
ring
subscribe.
Adam's bell. Is Adam here today? Ring Adam's bell, everybody. Ding, 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 ding. Let's see if maybe Adam didn't even make it tonight. Usually he's freer with bells on, but anyway, we'll see.
He'll join us.
I'm sure he will. Probably just off the top of the bat, top of the bat. No, it doesn't sound right. Right off the top, I wouldn't mind just sort of bringing to everybody's attention. It's probably a good idea for you to follow and join Coinigy, of course, on YouTube, and I suppose hit the like button, subscribe, all that kind of stuff. You should be able to do that here. And then while you're at it, if you feel like it, come and join the TRI YouTube page. Like button, subscribe, comment, all that kind of fun stuff. We got up to about 7,000 or 8,000 followers here on the channel, and just tons and tons and tons of content. So if you are interested in any of the things that I talk about here tonight, and you want to do some digging on your own, just maybe give TRI a little bit of a test drive before you actually pull the trigger and join. We have basically videos every single day, trading day. And we have a weekend show that we do, which sort of helps current students and also speaks to the market about our newsletter that we put out on a regular basis on the weekends. So I don't know whether, if you actually indulge me, just for a moment, Joe, we do have a free newsletter that I actually think you might get some value out of this if you are watching this broadcast afterward. Whoops, that's not what I wanted. And if we go into our library, all of our newsletter, we just started up this recent feature for the Sunday show. Here is the most recent copy of the newsletter. And if you would like to sign up, in fact, I'll just give Joe this. I'll PM it. Maybe you can put it in the description or something. That is the link to actually sign up for this newsletter, and you can get it in your email on a weekly basis. And it's just basically the weekend show that we do summarize.
Oh, sorry about that. Clicked on the video.
You start watch the video.
I accidentally clicked on it and background noise started.
Can you hear the air conditioner going in the background? Should I kill it?
I cannot.
Okay, cool. Awesome. Okay, so a little bit of a shill there, but hey, if you're interested, it's a free newsletter. All you got to do is just throw your name and email, that kind of stuff, and it comes in your inbox. and it actually has the link to the Weekend Broiler Chicken show right in there. And then the other thing I think I'll just mention, just, shill. Uh, our social media platform on Twitter, of course, Coinigy. You probably got the message about tonight's show from Coinigy's Twitter account. I don't know. You guys do a whole bunch of other social media stuff as well?
Uh, Twitter's definitely our biggest following
All
on there.
right, so everybody be sure to follow, click, like, subscribe on Coinigy on Twitter. And TRI, not only does TRI itself have a Twitter account, this is a really good, sort of good quality posts that aren't political and that, talk about the blogs and what we do. And Josh uses this platform to sort of communicate some basic messages to the public. So not a bad idea to follow that. That's TRI_PMA. And then, of course, Brian has his crazy rant. But just understand, I'm a bit of a weirdo. So I like to have, this is a Ubic. Have we ever talked about Ubic before?
Yeah, we have.
All right, so Ubic has NFTs like all these other cryptos. So that's a Ubic NFT. That's my alter ego in life, salty old kind of. What's that funny cartoon that's popular these days? Rick and Morty, right? So that would be
Yeah.
like a Rick kind of icon for Brian. And of course, do you know who this guy is? Did you ever figure out who this guy is?
Just know he was the scammer.
Yeah. And it's kind of funny how we kind of forget these guys' names. But anyway, he ran
Yeah.
a coin called Cabbage Coin,
Yep, cabbage coin.
which was an outright, complete, utter fraud and scam. And actually, a guy that we really need to bring on this show who used to do these shows with Will, myself. Yeah, hell, we used to have Da Vinci on the show as well. But Alex Sturck, he ran a show online called Block Talk, which just talked crypto. And I actually got to know this guy on Alex's show, and it was just hilarious how brutal the scam was. And actually, he was even convicted. He's a convicted felon now. So
Yeah.
I have this picture on here because I hate to say it, folks. You have to understand that in this day and age, in fact, I was just sitting watching, YouTube videos and stuff about the latest scams that these, princes of Nigeria and like Chinese con artists and crap are doing online these days. I mean, online it's just littered with scammers. So you have to understand, if you're going to get involved in this crypto space, you have to be skeptical first, right? In fact, actually, you're an American, so can you tell me what the state motto of Missouri is? Actually, there's Adam on YouTube.
Yeah.
Adam probably knows the state motto of Missouri. Do you know what the state motto of Missouri is?
Um,
Being an
uh,
American, you should know this, right?
I know you'd mentioned it. Like
It's called the Show Me State.
the
There you
show
go.
me
See,
thing.
Adam even got
There
it, right? Show me.
we go.
So I used to work with old gnarly brokers, so that was his favorite line. This one gnarly old broker I used to work with, Jack, and he used to always say, "Look, I'm from Missouri. Show me, right? I don't want your bullshit. I don't want your con job. I don't want your, full of hype and lies. Show me that this actually is of value. Show me the fundamentals, and then maybe I'll buy the story." So I think it's super important that everybody watching these videos, and if you're going to get involved in the crypto space, you have to look at everything with a jaundiced eye. And so that's why I have this gentleman's picture up here. I don't think we talked about it on this show because we want to try and keep it relatively politically correct. But we actually have a setup on TRI name for. Do you know what did we ever talk about the guy who actually put SBF up to pull off this massive scam? He was in
Yes.
the poker industry. Do you remember that guy?
Yes, we have. We
Yeah.
mentioned the other week on the show.
Yeah, I mean, I would remember his name. I do know his name. I don't want to say it because certainly don't want to have negative comments on your Coinigy show. But we like to call the setup the DFF setup, and that's this gentleman's first name, last name, and then F. Is there any colorful word in the
Yeah.
English language that we use if we ever going to use the letter F?
Yeah.
So use your imagination. And we call it the DFF setup. So, and
That's too
actually, I
funny.
thought would be a really good idea is to actually walk you through this trade because it fired and it just hit its profit objective and it happened on Bitcoin. So, what a great use of our time here to teach you about this
Let's
setup
do
and
it.
how you can use Coinigy off of lower time frames and also the tutorials that I've done for you guys. You can use it all in conjunction to trade Bitcoin on the Coinigy platform. What do you think? Does that sound like a good idea?
Looking forward to it. Let's
Okay,
dig in.
so I guess just the ultimate question is do we want to talk a little bit of Coinigy here before we jump into the charts and TA and all that kind of fun stuff?
Um,
This is your opportunity to shine.
well, everyone, so those who are new here, Coinigy is an all-in-one cryptocurrency trading and portfolio management platform. So rather than going to each of those individual exchanges, you can trade and track your portfolio all in one unified platform here. We've got countless features inside the platform. If you want to click on the launch advanced mode up in the top right corner, Brian. There you
Boom.
go.
In fact,
So,
actually, that's what this page is right
yeah.
here, right? So I've already
Yep.
preloaded it, but
So,
we can do that
uh,
again. Click that, and away you go.
there you go. So when you log in for the first time, you can see you got a full tutorial of how to navigate through the platform. As you can see all along the top, you've got your portfolio, your orders, alerts, all your API keys. The screener and the ARB matrix and boards are all some pretty cool features that we can play around with on uh, another time. The ARB matrix is kind of what started Coinigy out. Uh,
This would be you know
I
what? We should do an episode where we just literally walk through these
I
and
think that
you give it, like everybody, a tutorial
I
on
think
how
that'd
to
be
use
cool.
these. That would actually,
It'll,
I think that would be a really good episode.
yeah. Let's make note of that. And but yeah, so that is the outside view. There's definitely a lot more you can dig into on Coinigy, but we'll have to save that for another episode.
Sure, sure. Sounds good. I guess just the question is, I don't know. Do your and we talked a little bit about this before the show, so we don't necessarily need to go into it too much now. But long and short of it here, shall we jump right into the charts?
Yes, sir. Let's do it.
All right. I thought for fun, like I said, we just had a lower time frame trade setup. Just hit its profit objectives on Bitcoin. So I thought, what the heck? Why don't we, for fun, walk you through the logic behind how this setup worked? So here is the daily price chart on Bitstamp. Of course, maybe pick the exchange and the product that you particularly trade. We talk about M's and W's, and hopefully now Joe is, how do we say this? You're up to speed to the point where you know some basic TA.
I'd say so. I'd have to
Um,
consult my handy dandy notebook here and there, but I think that's what it's for. So,
so if we see things like W's in indicators, and hopefully you can see that.
yep.
So we kind of went like down, up, down, breakout. That's a W. That's bullish.
Uh,
And then unfortunately, kind of actually what you see right
Opposite, you
here,
see an
up,
M.
down, up, failed. That's bearish. You also see this here, up, down, up, fail. That's bearish. And then more. So everything that we've talked about M's and W's, you can apply to indicators. And unfortunately, maybe one, actually, I guess we have to get to the point. Do we have the page on Coinigy where all these tutorials are kept? I think I asked you before, but we didn't really
No,
have an
not
updated
yet.
page.
Yeah, I don't
So
think
as soon
the
as you have that ready, I think I might start adding more tutorials.
yeah.
And actually, I do teach a very specific way on how to trade RSI using M's and W's. And right now, as we sort of said there just a moment ago, we had actually a cute little M that just fired here. And that's sort of a cool your jets kind of M. Unfortunately, we also could potentially have this bigger M firing. Can you see that M potentially forming?
Yep.
It hasn't come in yet, but if it does, that actually represents a very, very big sell signal. So just be forewarned, forks. Forks. Just based on RSI, you can see we've got M's and we don't really have any W's here. That's just generally a
Oh,
negative sign. Now, let me ask you this question. I'm going to really test whether you actually are paying attention to the old man or not.
oh, brother.
Um, First off, when we look at, actually, I think I can do this a little easier. Sorry. Uh, yeah, let's go. Boom, boom, boom. There we go.
Hmm.
Okay, so when you see, first off, do you see any letters of the alphabet jumping out at you? This is MACD, or moving average convergence type and divergence. If you've never seen this before, I think actually I do have like one of the old version MACD tutorials from when Will and I did these videos on Coinigy years ago. So I think it
I
is
see a
floating
nice
around.
big M right there.
Okay, so that's what I was hoping that you'd see. So hopefully what you see is there's a big M staring us in the face. And if I'm a bull, and how many people in crypto are actually bears? Not many, right?
Yeah.
They're all like either I'm a hodler and I've owned it for whatever, and I'm never selling,
Yeah.
or hey, I want to get in, just tell me where to buy. I want to buy, right? Kind of thing, right?
Yeah.
So, if we see M's generally in our indicators, is that an indication that we should be maybe bullish, or maybe
Oh,
at the
bearish.
very least, maybe a little cautionary?
Cautious.
Right. In fact, actually, we
Jeez.
have a really fun uh, sort of GIF. Some have them, some don't. That we post anytime we ever see this, and it's actually this one right here, and we have an expression, "Cool your jets," right? Where maybe you
I
just
like
ought to
that.
just take it easy, just cool things down a little bit. But there's actually a textbook definition of this term. So this is where I said I was going to test you a little bit.
All
So do
right.
you notice that this big fat M came in here, and yet the price of the asset is continually moving higher and making higher highs and higher lows? Do you
That's why
see
you need
that?
to um
Well, before we get ahead of
reasons.
it,
Okay.
what
Okay.
would we call this condition?
Divergence.
Very good. So you are listening to me. Yay!
Woo.
So, I think, we could probably even and I don't know whether this is going to work or not, but I think that, it might even be sort of the message of the week. Whoops, where'd it go? There it is. Sorry. Might even be sort of the message of the week. Let's see. Can I paste this on here? Whoop, that's weird.
I honestly have no idea. I don't think so.
See text and images copied to the clipboard. Will it allow that to do that? No. Oh well, it was worth a shot.
Yeah, I was gonna say
Um, what we can do is
thought
just go like
trying
this,
that.
go copy image, and then of course I'll do a little. Where's our paint? Then we'll go paste, and then we will go back to our. Where is the chart? Was this it? Yep, there it is. And we'll go copy. And where is copy image? There it is. And we'll go paste, and just like that, we've done internet magic. So I think our message for the week has got to be uh, when, whoops, let's maybe even do this in a nice bright color so you can see this. When you see divergence and you are a bull, what should you do? Question, question, question. So,
Go Jets.
right. And the answer should be cool your jets. So, I don't know how we can throw this onto the video, but I
I like that.
definitely think
Well,
that's got to be the message of the week here.
on there. We'll have to clip that part. And
Yeah, let's see. Where is the bottom of this thing? Usually I can just move this up. There we go. I'll go like that. And then we'll go like that. And then we will go like that. And whoops, let's get rid of that thing, whatever that is. Sorry. And I'm wasting time. Sorry, everybody. But I think this is a pretty important message. You know, if anything, what I'd almost say is this, Chris, if you're watching this later on, is there any way, I'm going to post it in the Discord room, you and I chatting there. So I don't know if there's any way that we can maybe even make a link of that. In fact, actually, I can make a link of that. We can go open in browser. Oh, that's a big link. Let's make a smaller one. We'll go like that, then we'll go like that, then we'll go over here, share, copy, and there you go. There's a nice polite little link. Maybe you can throw that in the description of the video today.
yeah.
I think anybody new to trading, I mean, that is number one. That's the most beautiful confirmed bearish divergence you're going to see ever. I mean, it's just so perfect. This is a good application of the MACD indicator, but the thing is that probably most people in this world, they probably never use MACD like this. So this happens to be a very unique way that I use MACD to help us visually see what momentum looks like in the market. Super cool. And of course, this is a module in our education program if you want to learn how to formally do this. So, point of the matter here is that for a while now, and unfortunately this is kind of a tough message, especially in this environment when you go on YouTube and every second, 20-year-old kid is out there saying Bitcoin's about to go to the moon, and if you don't buy now, you'll regret it for the rest of your life. Well, actually, if you listen to the message of the market has basically been telling us as of right here, because this is where the divergence actually confirms.
After it breaks past it.
Right, when this M actually comes in, you can see this low number here, 847. This is 864, 702. So actually, the bearish divergence was confirmed right there. So as of this point, if you're a bull, you're best just to do absolutely nothing. And the irony of it all is, oh, look where we are. We're basically sitting at exactly the same point on the price chart. I mean, does it not make sense? Cool your jets? Well,
Yeah.
just let this crap resolve itself. Now, the problem with this, of course, you can see we're a bit weak here in the short term. And, my preferred moving averages, you can see my fast moving average, we're kind of losing it here, aren't we? Which means that my next stop, you see how we tag this sort of medium term moving average right there. So my next sort of target has got to be a tag of this medium term moving average down below here.
Okay.
So the point I guess I'm trying to make here is that we're starting off the conversation with a big fat bearish divergence staring us in the face. And okay, maybe we're not going to be bearish and we're actually going to put in what's it going to take to actually negate this big fat bearish signal? What do you think? Yeah.
A W on the other side.
Right. Well, so the point here is, and you can see that this MACD histogram is trying to W. We went down, then we went up, then we went down. And what's the key about a W? Can this low be lower than this low?
Higher highs and higher lows.
My answer that I'm looking for
And
is a
then,
big fat no.
no.
If you are looking for a W, you do
Yeah.
not want to see this go through this low. Because if
No.
it does, then really all this is just another leg. That looks like an M, doesn't it?
Mm-hmm.
All right, up, down, up, fail. That's an M. Oh, that's another sell signal. So the point being that we can't even really lose this bearish cool your jets message until we actually see this thing W out. And this is looking a little tough here right now, eh? Because remember I said just a moment ago, we actually have been flirting with our 13 EMA, which I like to use as a short-term support line. We've been flirting with this now for basically a month. This is a weekly price chart, eh?
Mm-hmm.
So 1, 2, 3. This is the 4th week playing with this level. And uh-oh, this doesn't look very good, does it?
No.
So I can't get bullish on this thing until I actually see a W, which actually means I need to see this low hold somehow, and then this thing actually turn back up and go through that high there.
Okay.
So we've got a lot of work to do here to get this thing back looking bullish again. And the sad thing is I just don't think the public understands them. And anybody who's watching the Coinigy videos, using the platform, if you watch, of course, TRI's videos on a regular basis, then you know this. You take the education program. I can absolutely guarantee you all pit traders know this. Any investment advisor worth their weight understands this concept. But sadly, the public is completely oblivious of this, which is so sad.
Mm-hmm.
I mean, Adam's over there on YouTube. Adam, can you confirm that this is a core concept that we teach at TRI? This concept of divergence. And if you happen to be, it also works the same thing in a bear market. So do you see how we did have bullish divergence here for quite some time? You see how we were making higher lows, and yet we were making lower lows in price?
Mm-hmm.
We actually confirmed a bullish divergence here. And what a surprise on the confirmation. Our job, of course, is to hunt for a W following the confirm of the bullish divergence. And this is the W following that event. And what do you think? Would buying that W, would that have been a good idea?
Yeah.
So the point here now is, now that we have the bearish divergence confirmed, if we get a certain letter of the alphabet to come in here, we actually can start getting extremely bearish. What letter of the alphabet do you think that is?
Where are you pointing?
Up here,
Oh, up
with
here
a
now.
confirmed bearish divergence.
Yeah, that's an M.
If we get a certain letter of the alphabet, we actually can start thinking about actually shorting off the weekly chart. So what do you think letter of the alphabet I'm thinking about here? That's right. So I think as it stands right now, we just made a new high and we are pulling back now. Is that an M?
No,
Not
it's
yet.
not.
But having said that, do you see how this actually could be? And I'd be curious whether you would know what this pattern's called. What happens if we do something along those lines? What's that called?
Not sure. Adam?
You can actually come down to the drawing tools, and do you see how this?
Head and shoulders?
Yeah. They even give you a nice little
Yeah.
name here, right? So I'm worried that this actually is carving out some sort of head and shoulders pattern, which would make sense. That actually is a very typical way. This is also called a fractal. Have you ever had me talk to you about like the Canadian maple leaf and how it looks like a fractal?
No.
Have you ever seen I mean, this is a
You
butchering of
wouldn't.
a job of a drawing, but have you ever seen me draw a maple leaf
Not
like
on a
that?
chart.
Right? And why don't we do a little bit better professional job?
But let's do a more professional job. Let's do this in paint.
So, do you see the Canadian flag?
Yeah.
And do you see I don't know why it's doing that, but do you see the little head and shoulders right there?
Yeah.
Oh, goodness. Anyway, I don't know how to do this.
I see what you
So,
mean.
anyway, the point being that this is a very natural way for Mother. There's Brian's butcher job. That's a natural way, and hopefully you see that this kind of looks like this up top here, right? Or
Yeah.
this one, or this one. It's just the way Mother Nature works. So this would actually be a very normal chart pattern. And in a weird sort of way, in the left shoulder, if we actually change this to a line chart, can you see how, hey, look, there's a little bit of a fractal there. And we're making the head. So we're probably going to come up and do another one of these little fractalies over here. So I guess what I'm trying to say here is that I don't necessarily have a short setup on the weekly charts, but I definitely have a message from the weekly charts that if you are a bull, you just got to cool your jets. Simple as that. And because this bearish divergence is in here, and as long as it remains in place and we don't have this big honkin' bullish divergence form, we have to be thinking either sideways or down when it comes to momentum right now. So, with that said, I think probably the easiest thing for you to take away from this is just simply we've got the cool your jets message. Whoops, that's not what I wanted. Let's maybe do that. And about that. So, since there is no M up here, what have I told you about V tops and V bottoms in the past? Here, we can even write on here. Let's go here. And let's go here, and we will type in confirmed bear div equals bulls cool your jets. So you don't even have to have the indicator on the screen for you to note on your charts that we got a big old bear div working here, right? So what have I told you in the past about, I mean, you already know what markets in transition look like. What are the letters of the alphabet? Markets in transition, we're looking for 2 letters.
Markets in transition.
Right, remember down here, what's this?
The bottom.
Right, it looks like what letter of the alphabet?
W.
Right, and conversely, bearish, M. We don't have that now, do we?
No.
So
We haven't jumped into the V tops and V bottoms yet.
Okay, so that basically is a V top. Does that make sense?
Yes.
And the rule is kind of like what you see here. See how this was a V top?
Yep.
So the rule is, by definition, V tops, and you can make the argument, this was, kind of a V bottom there. This pretty good example of a V bottom here. Notice how the market rallied away from it and then came back down and had to test that low. Yeah. Market V bottom, it rallied away and it had to come back down and test the low. So, and same sort of thing here. Market moved away but had to come back and actually test that high. Well, that's what happened there. So, I think at the worst, because of the momentum condition, I think that basically we're stuck in a trading range right now, where we know by definition this top will need to be tested at some point down the road. In fact, what do we call this part of the candle when it looks like that?
The wick.
Excellent. And our reference, I don't know whether you remember this or not, but maybe you wrote it down. Wicks, and what do we call this part of the candle?
Tails love to be eaten.
Excellent, and that's the premise behind this sort of idea that this will be tested. Wicks and tails like to be eaten. So there's your top end of the range is just going to be, I should expect at some point that should be tested to the upside. And then conversely, there's the bottom end of your trading range. And because tails at some point down the road, and that is a V bottom. So that should be tested at some point down the road. So now can you understand how we can call this a trading range?
Mm-hmm.
That's, I wouldn't just that. If
I'm
anything,
sorry.
maybe
I'm writing
just,
this down.
yeah. I mean, take a screenshot of this if you want, throw it in your journal. This
Yeah.
is incredibly valuable information. And I would say that the professional traders, they're going to be hunting this area to get short. Does that make sense?
Yes.
And then conversely, professional traders are going to be hunting this area to get long.
Okay.
Hopefully that makes sense.
It does.
Now, watch what we do. This is one of the videos that we recorded, or I recorded, tutorials. How can you come up with a tool that ahead of time is going to highlight those areas on your price chart?
The chaos theory.
No.
Oh.
Nice
That's
try.
a very good net.
We said this is a trading range.
Yes.
So, I mean, let's back up and let's ask you a question. Maybe you can answer this,
Yeah.
maybe you can't. There's like a half a dozen people watching this video. So, if you do know the answer, please feel free to help Joe out. We're all here to educate Joe. So, about how often do markets stay within a trading range? If we were going to break like all infinity of time into a percentage, about how often are markets going to do nothing more than just ping pong back and forth between these extreme edges of this trading range? And it's a pretty high number.
Is it 60%?
Higher.
91.4?
Well, those are gaps. I can see you're like literally reading off of your notes.
I'm trying. I don't know.
Well, then maybe write this down.
Yeah.
Markets range 70 to 80% of the time. So, given that statistic, it makes complete sense why the market rallied up to the top end of the range here.
Okay.
I'll just wait for you to quit writing. All right, now you're back with me. 80% of the time, 70 to 80% of the time, market's going to rally up against that high and then fade back down.
Okay.
That's a pretty high number.
That is.
70 to 80% of the time. So, is there a tool that we use that can help you identify zones, can help you identify these green zones where the guys who trade that 70 to 80% probability are likely to buy, and where those guys that trade that 70 to 80% probability are likely to sell?
The reload zone?
Excellent. And watch what happens. We've already drawn the green boxes.
Yeah.
All right, I'll just throw on my little fib tool. We'll go in, we'll put in the reload zone fibs, 78.6, Brian's favorite fib or line in the sand. 61.8, I like to call the mountain man level. A old pit trader I used to trade with he used to love that level. And then for venture cap traders, I think our newest addition is the venture cap reload zone is 78.6 to 88.6. Now, actually where we sort of pivot is actually a great anecdote on what the sort of quality of the issue is in the sort of street's eyes. So let's throw this on. Let's see if that lines up with green boxes. Survey says, hello. Notice our green box, and there is the reload zone. Remember, said Brian's favorite Fibonacci retracement level, 78.6. And notice, what did we talk about? Maybe you can remember this. Is there anything important about these candle body lows here?
Yes, it is.
They make
What?
for a great trade location.
Yes.
And notice, look how that just so happens to correspond nicely with that 78.6 to 88.6 level. And so that's your buy zone. We've already identified where your buy zone ought to be. And then conversely, you can do the exact opposite on the sell side. And you can just simply say, even now, notice reload zones happen to be right up in that red box. And that's just using the current low. So this is a really handy tool to help you mathematically, especially people that are like sort of computer centric, that really like working with numbers and mathematical ratios. This is a really handy tool to help you visually see these reference levels. And don't be surprised that when you draw these kind of studies, we don't even know where the ultimate low of this move is. My hunch is it's probably going to be against, well, what a surprise, the reload zone, right? But
Yeah.
this 30 SMA, my hunch is that's probably where support's going to come in. But notice, and then remember we talked about the potential for a fractal top. Notice that if we do say dump all the way back down into here, I don't know, maybe we'll pivot off of the candle body lows. Who knows? But notice how the reload short zone is up in that wick, and there's Brian's favorite fib sitting right there at that 78.6. Isn't that cool?
That's very cool.
So this helps
Science.
you a lot. Just this one tool will keep you out of a lot of trouble. Just simply throw on the fibs, identify where the reload zones are, and then just simply asks, are there any wicks and tails that maybe the market will rally into and fail against? Remember we had said earlier that this might be a head and shoulders top, right? Do you remember we said that just a moment
Yes.
ago?
Yep.
So watch this. This is super cool. A textbook head and shoulders top implies that the neckline should be somewhat horizontal. The more symmetrical it is, the better. But what it also implies is that the right shoulder should actually be about the same level as the left shoulder. So that means, by definition, we could, ahead of time, actually just draw a line right off this left shoulder high. And oh gee whiz, look how that happens to line up in our reload zones, which happens to line up right in the wicks, which happens to be right around the candle body high for trade location. So
Yep.
already we can see where the ideal trade setup to go short is. It's right in this window. Like that.
Mm-hmm.
And then conversely, like we did just a minute ago, we can already identify where the ideal buying location and what's the percentage of time that this market should come down into these lows and then turn back up to actually give you a trade. What did we say that percentage was?
That the
This is a trading range.
Yeah.
So that
So
means
this
by
70 to
definition,
80%.
right? So 70 to 80% of the time, the market should have rallied up into these highs and rolled over. And that's exactly what it did.
So when
70
you're
to 80% of the time, we should probably come back down against these lows and turn back up. Does that
so
make
when
sense?
you're setting up for the short there, do you put in the short once that's like that right shoulder gets up there, or is that one where you put in before predicting that it is a head and shoulders? Does that make sense?
Uh, well,
Do you,
I'm
when are
leading.
you?
I'm actually leading you in a specific direction here.
Oh,
So
okay. Sorry.
the logic of this is that you're going to use this higher time frame chart to actually identify ideal trade locations ahead of time. Does that make sense?
Yes.
So this is a weekly price chart. And as it stands right now, I mean, you've missed the short trade up here. But as it stands right now, if you are like, okay, well, I want to prepare myself if I want to be a buyer of Bitcoins and I want to try and buy against lows, because I know 70 to 80% of the time, the odds are the market's going to pivot somewhere down in this area, and it is going to pivot. And I'm probably going to think about down the road, if this pivot does come in, I'm going to look for some sort of short setup or maybe to take profits off of this buy in this area up here. Does that make sense?
It does.
Okay, are we going to actually take a trade if we're trading now? The conversation is all about trading.
Okay.
Are we going to take a trade and actually trade lower time frame setups? And I just gave you the answer off of this weekly price chart. The answer is no.
No.
But at the same time, too, was there any sort of message that we got from the market that said, you know what, maybe buying and hunting long setups right now is not such a good idea? Hint, hint,
The
hint.
top is.
Well, remember we just did all this stuff,
Yeah.
right? As long as this confirmed bearish divergence is working and it's validated, you're probably best to be hunting shorts, not longs.
Understandable.
What we would like to see, of course, going back to our conversation from just a minute ago, what we would like to see is we would like to see if price does come down into this area, we could potentially get a nice bullish divergence out of our MACD indicator. And if that's the case, then we can start hunting longs, right? So
Yeah.
maybe we get something like
Get a W.
down, up, then down on this sort of big push down into this level, but the indicator does not go to new lows. Then the indicator starts to turn up on some sort of counter trend rally, and maybe you get like a W in price, and that frames a nice long entry. And we can start writing on our charts at this point on this dump here that we actually have confirmed bullish divergence. Does that make sense?
It does.
Okay, so we set you up by saying that the market had rallied smartly off of a confirmed bullish divergence, and then we got a nice W in price, and there's basically your 2023 rally. That describes what Bitcoin has done over the past 6 months. And it was a fantastic rally, right?
Double, more than double.
Yeah, that's better than a kick in the pants, right?
That's for damn sure.
All right, now we've got confirmed bearish divergence. So should we be thinking bullish now? No. In fact, if short setups come in, maybe we should entertain those short setups. So the question is, are there any short setups that may be developed up here that you could have traded and you might actually still be in the short as it's working away? And if I lead a question like that, what do you think the answer is?
Yes.
So, this brings us back, of course, to your friend and mine. We won't say his name because I'm sure he'd probably sue us. But we all know who I'm talking about, and if you don't, pop on the TRI website. We make fun of the guy basically on a daily basis. But let's pull down the lower time frame chart and let's see if there was anything that helped us frame entries. Okay, so we said on the move up top here, this was a confirmed bearish divergence. We've now drilled down to a lower time frame chart, and we're just hunting short setups to try and ride that. Come on, you. To try and ride that bear move. So, can you see, again, we're obsessive about hunting certain letters of the alphabet, right?
Yep.
So if we're thinking short, what kind of letter of the alphabet are we thinking?
An M if we're shorting.
All right. So now this, unfortunately, and actually there's a couple of them here. So hopefully you can see that there was a...
The chart smiled at us.
Yeah, that's right. Good thinking. So there was that V top. That was an idea divergence. This was all about the BlackRock ETF, right? And again, 1% screwing with the public. Not a big surprise. You know, you can see the W's in here. You could have played that W to the upside. But following this big dump, which of course confirmed the bear divergence, that move there, right? Remember we said, where's our horizontal line where that actually fired? Might have been a while ago. See if we can go back to that weekly chart. This might get a little slow. Come on, you. You can do it. Actually, maybe I'll load up another one just to make sure that we can do this smoothly. Actually, why don't we just work off of here? This works fine. Okay, so over the weekend, we had this huge W come in.
Yeah.
But remember, we had the weekly bearish divergence that was kind of telling us to cool our jets, right?
Yes, sir.
So I don't know whether this would have been a good idea to get sucked into, hey, that's a big W, man. We should be bullish. I don't think that was a good idea. But then notice what happened, like literally moments after this big W formed. What letter of the alphabet is this?
Nice. M.
And this was a trap, which sucks because
They're
a
smiling at you.
lot of people that probably said, well, that Beamish guy says W's are bullish, so I'm gonna go buy that, but it was a trap. No ifs, ands, or buts. And unfortunately, in the tweets and messages that I've been putting out, at least recently, are like 2023 is an accumulation year. We've talked about the Benner cycle before.
Yes, we have.
So you should all be familiar with that. So the point here is that should we be thinking moon in 2023? And I think the answer is an unequivocal no.
No.
Now, as we had said there a moment ago, I mean, we got big fat messages from our weekly price charts, and we'll let that reload, saying that we should be cooling our jets. So maybe being like overtly, insanely bullish is not the best thing for us. So with that sort of in mind, and you get this big fat M that comes in, well, unfortunately, I think this was a trap, and it was actually a trade setup. So watch what, remember now we're on the lower time frame. So now we're talking to sort of the traders of us, right? We're not really talking investors. We're talking like maybe swing traders.
Yeah.
So what did we say the best tool is for us to use to gauge if we are, near a range, that if we're in a ranging market? And sadly, I actually think that this is still a range. We want to use that reload zone concept, right?
Yep.
So notice, I could pop on here. We'll reverse this. And you see that if I was interested in buying, this is the area that I probably want to be interested in. Also notice too, just really simple trend line analysis. That is actually a valid active trend line there. So the question is, do you see how potential trade location is starting to form down here?
It is. Yeah.
Doesn't necessarily mean that it is. And how many reasons do we have to justify taking a trade?
3.
And where does trade location fit in?
That is what do you mean, like where? Location.
Well, because there's 3 reasons and there's a very specific cadence. Number 1 reason is always
is location. And
trade location. So we always start with, are we in good trade location? That's why it's probably not a good idea to look at a chart like this and say, well, you know what? I want to be hunting longs here. Is that really the best trade location? And the answer, as you can see in hindsight, was no, that probably wasn't a good idea. Remember we said markets range 70 to 80% of the time, and wicks and tails like to be eaten, candle body lows for trade location, Fibonacci retracements, trend line support. This would be a far, far better place to hunt trade location over here. So on the false breakout up top here, we have a letter of the alphabet.
An M.
We know that if we want to think long, maybe we should be thinking down here. Is
Yep.
there another tool that we can use to validate that based on this M in price, price is likely to go to? Hint, hint, hint. If I ask that question, the answer is probably yes.
Yes.
And we even did a video on Coinigy about all of this
Yes.
using chaos theory to try and help us see where markets are likely to move.
A trading.
So if you need help with this concept, chaos theory, we have this totally awesome video on the Coinigy platform. And also, too, you should be able to, I guess, find it on the Coinigy YouTube page as well.
Yep.
Be sure to check that out and watch this. This is such a cool application of this. So, if you're like, well, there's M's and W's, and that looks like an M, so maybe I'm going to think about shorting that M. So I'm going to go short on the fail of that M, and I'm going to put my stop loss just above these highs. But where should I think about taking profits? I'm going to use chaos theory now to try and help me see downside objectives. And lo and behold, if we take the retracement levels off and we put our chaos theory extension levels on, you'll see that
8.77.
right, 2.618, 4.669, and 8.77. I mean, technically these go on to infinity. The next one after this is 16 point something. Next one after that's 32, etc., etc. But can you see here, 2.618 actually aligns nicely with the reload zone. So you could have said, you know what, I'm going to force myself to take some profits on a trend line tag, on the reload zone tag, on the wicks and tails like to be eaten, and maybe even on that chaos level too. Nothing wrong with that whatsoever.
Mm-hmm.
So I do like this as a profit-taking location. And anytime I'm skeptical and I think that there is a trading range, I actually give myself permission to book profits at 1.5 to 1. So
Okay.
I think that this was actually a manufactured trade that spat up. Basically, chaos theory told you that the market was going to come back down against these lows. Now, at this point, you can say, well, we've got potential trade location. What did we say is step number 2 to think about actually maybe justifying buying here?
Indicator confirmation.
All right, so let's pull up our indicators. And what's the magic concept that we're looking for out of our indicators to try and help us identify
Divergence.
that the market might be ready to turn? That concept
Divergence.
called divergence. So let's pull up our indicators. Do you see any divergence in selling volume? Is the selling volume drying up? Should be
No.
pretty easy to answer.
Is the selling volume?
That's the red bars.
Yeah, no.
Are they emming out?
No.
How about the OBV indicator? Does it look
No.
like it's Wing out at all?
No.
All right. So from our volume momentum perspective, ain't no indicator confirmation
Thanks,
here. How about our price momentum indicator?
Nope.
Do you see any W's there?
No.
In fact, on this recent failure, what letter of the alphabet does that look like?
An M?
All right, remember I said on the weekly charts, we can't even stop cooling our jets until we see a W. But what might happen off of the weekly charts, did this load back up? Oh, there we go. What are you doing? Where are you going? All right, there we go. Oh, there's the 4 hour, right? Remember we were on that weekly chart, and we said that if things get worse here, What might this actually turn into?
Could turn, that's an M now, so it could turn into
Another M.
N.
Right? The M might be up, down, up. It's ugly, but that's an M. Right? Can you see the M?
I do.
It's kind of messy. So the point being that on the 4-hour chart, that is spitting out M's. Do we have any sign of indicator confirmation that this bear slide is over?
No, sir.
None. All right, so we're getting a big nothing burger out of volume momentum. We're getting a big nothing out of price momentum. How about our old buddy relative strength index? What letter of the alphabet do you see here?
The pretty resounding M.
Yeah. And, as I said, I think I want to do another tutorial for you guys. If you see one of these big honkin' M's come in, and here is the 50 line, and the 50 line, if you happen to see the M come in through the 50 line, this is pretty close. It's not bad. This becomes actually a monster sell signal right there. See how the M came in right on that bar there to there? This big M, up, down, up, fail, right through there.
Yeah.
That, my friend, is a huge sell signal. So where did that happen on the price charts? That was that failure right there.
Yeah,
Can you see how that failure right there paints another letter of the alphabet here, right? Up, down, up, and we said this bar right here was that huge RSI sell signal, right? Right there.
Yeah.
Right, that was right there. And actually, one of the TRI principles, Julian, he literally lives by RSI. He literally gets up in the morning and brushes his teeth with RSI. What? Just kidding.
My favorite type of toothpaste.
But can you see how we're making lower highs and lower lows on the RSI? And this big honkin' M there. Ugh. Huge, monstrous sell signal. Monstrous. So you could actually even make the argument from an RSI perspective, we got a huge sell signal in RSI. What's the date? Can you see what that says?
August 15th. So
That's
yesterday.
like a couple days ago, isn't it?
Today's the 16th.
16th today? So that was yesterday. Remember, this is our 4-hour chart. This is a very good swing trader signaling system if you want to use that. Hugely bearish. And the sad part about it is, remember we talked about bullish and bearish divergences? Mm-hmm. Like Julian would be following. Can you see how this was making higher lows and higher highs?
Yeah.
So do you see on that event where we broke down and made a new M top, can you see how RSI at the very same time, it broke that uptrend line on the RSI?
Yeah.
And like I said to you but just a moment ago, that is like the biggest, nastiest, ugliest sell signal you're ever going to see. I mean, anybody who's watching this video, you are getting... Do you realize that people on Wall Street pay like tens of thousands of dollars to just be taught this? And you're getting it for free, and there's 7 people here. I mean, this is ridiculous.
Yeah. Well, we get a couple hundred that watch it after.
Oh, good. So all you couple hundred, and let's get it up into the thousands.
Yes,
Tell
sir.
your crypto friends. This is absolute gold, what I'm trying to teach you, all of you here. And the great part about it is you can actually come on Thursdays is Julian's day to do TRI's daily video. And he literally... Pardon me? Yeah, the daily brief, yeah.
Is that the one at 9 a.m. Pacific
That's right,
time?
9 a.m. every single day.
On
Julian's in Thailand, so their clocks run a little bit slow sometimes. Our inside joke. But basically at 9 a.m. That's noon Pacific time, and that would be 11 a.m. Central time, right?
Noon Eastern time, not Pacific
Oh,
time.
what did I say? Oh, did I
You
say
said
Pacific?
Pacific.
Sorry, yeah. Okay, so point of the matter here is all of you just got the most incredible tutorial on using M's and W's and trendline breaks to actually identify buy and sell signals using the Coinigy platform. Absolutely gold. And also too to sort of um, what's the word I'm looking for? Reinforce the signal. Do you see how RSI tried desperately to recapture this line? It went down, tried desperately to recapture it, and it was rejected. That
Yeah.
is a huge message from the market right there.
Told you.
Huge message.
Cool your jets.
Oh, wicked cool your jets. I mean, remember, that's when the market goes into divergence. And remember, we got that message a while ago.
Yeah.
This is actually justifying actually shorting. So not only cool your jets, but actually, okay, I'll use sharpshooter traders. You're actually getting a message to take a short here. Um, and, we go back to our dotted line. Where did we say that dotted line came in? That came in right
August 15th.
there, right? That's where this was confirmed, and that trend line broke right there. So OB and this OBV indicator is not correct. Something's not right about this. But we'll just work with the here. Let's yeah. Okay, so that's the OBV EMA. Let's. Oh, these are two OBV EMAs. Well, that's weird. Okay, so that's why, because these are both moving averages. I'd actually like to see the OBV itself. So we won't use, I mean, they are pointing lower. So no doubt about it. You're not getting any bullish signals out of OBV. But more importantly, this is a concept called volume impetus. And actually, I've been doing this lecture a lot lately. I even on my
Volume
Twitter
impetus.
feed, I actually did a very lengthy OBV and volume impetus tutorial. And I even tweeted it out here. If you ever wanted to learn how to use volume information to validate a trade idea, this was all about volume impetus in this video. But hey, I think if you could do me a favor, I think we could do one off of this one as well. So
Yeah.
if you could put in the description hashtag volume impetus, and then in the video description say, oh, by the way, Brian's also giving you a really good tutorial on using volume impetus. Do you see these red bars here?
Yes, I do. I'm making
This
note.
means that price went down on this particular candle. Does that make sense?
Yes, it
And these
does.
green bars, this means that the bar went up on that particular candle. So it takes buyers to push price higher. It takes sellers to push price lower. So if we see higher red bars, then it means that the sellers are active and they are accelerating their behavior. Does that make
Okay.
sense?
It does. Visually, yes.
So you tell me, who's in control of this market right now?
The buyers.
Wrong.
Really? Well, because if they're selling, wouldn't it be better for the buyers? So it's
Okay,
pretty much
so we'll stay it all over
done it
again.
again.
So green bars mean that the
Yeah.
price of the asset moved which direction?
Up.
All right, so the buyers are in control of this market when you see this.
Okay.
Notice at the same time, look how the red bars are getting less and less and less. So the sellers are backing away.
Yep.
But we
All
don't
right.
have that situation now, right? Where are all
Yeah.
the green bars? This is the extent of the buyers, that right
Yeah.
there. And then notice, look how the buyers are just really not doing a lot here.
So
But at
yeah,
the same time, what are the red bars
just
doing? Are they getting
selling.
bigger?
Yeah.
Which means who is in control of this market?
Sellers.
So you can use
Sellers.
this concept. You can see how the green guys disappeared here. The red guys took over. And what is the indicator doing? Is it going up or is it going down?
Down.
That's a validation of who's in control of the market. Does that make sense?
Does make a note of that.
All right, and as I said, this is a good tutorial on volume impetus, or the impetus is with the bears right now. They are driving the bus. And this won't stop until you actually start to see the red bars get less and less and less.
That makes sense.
And I would actually argue for us to actually see that the bulls are in charge, we need to see the green volume bars get bigger and bigger and bigger. So, with that said, who's driving the bus right now?
The sellers
Exactly. What's price doing?
going
Heading
down.
Do we have bullish divergence, i.e., the indicators are bullish,
No.
but price is heading down?
No.
No. We don't have it on volume, and we
Sure.
don't have it on price momentum. Do you see how
Sure.
we just broke to new lows here?
Yes.
Right? This low in the MACD histogram was minus 42. This low here, last 4-hour bar, was minus 49. So this M has actually been confirmed. It doesn't matter what this candle that we're in right now does. This bearish breakdown has already happened. So, who's driving the bus here? From the volume perspective, the bears. From the price momentum perspective, and remember, we just did that awesome tutorial on RSI. Who's driving the bus here?
Sellers.
Yeah, the bears.
The
Now, the
bears.
issue here is, do you want to put on a new short trade with the RSI sitting heavily oversold like this? No.
No.
In fact, what I often tell people is, and like I said, I'd like to do a tutorial. I think the next tutorial that we'll do for Coinigy is on using the RSI tool and using the signaling system that I would use over the years. It's very, very effective. But in essence, it's based on 3 M's. So remember we said there was a really big M that came in here, right?
Yes.
Up, down, up, fail. Notice that there were M's that came in before that.
Yep.
And then notice we've got M's that are coming in here. Oops. There's one that came in here. Then there's another one that came in here. So by the time we get to the point where you see 3 or 4 M's in a row, you miss the trade. The trade's gone. The sad part about it is you might get like with the indicator this far here, you're probably going to get a lot of public panic here.
Yeah.
And the irony of it all is that as good technicians, and like I said, if I do the tutorial for you guys, I'll try and do this going forward. If we actually get a W that comes in here, this is a signal that if you were bearish, you got to cool your jets. This isn't necessarily a buy signal, just as this M up here was not really a sell signal.
Is it just more of a recovery?
This first M, it breaks all this bullishness. Remember we were saying there's lots of W's, there's a W, and then, you could make an argument this is a really big W, right?
Yeah.
down, up, down, breakout, right? That's a big W, right? So this M, especially being slightly overbought up top here, this M here is, look at, if you were bullish, you better just cool your jets, pop off on the sidelines. So let's see what happened on that M. Was that really the best sell level? Yeah, maybe yes,
Yeah.
maybe no. We did have actually, I remember I had said earlier that was a nice M top, and that framed this trade. But at the very least, I would say if you were bullish, you better cool your jets on that event. And then, ironically enough, from this perspective, I actually think from an RSI perspective, this is actually your major sell trigger. Because, like, think Julian, we just broke this massive uptrend line and we've now established a new downtrend. And I think, I can't speak for him personally. Maybe we can have him come on a Coinigy show one of these
That'd be
days.
cool.
But I think that he would basically say, I can't get bullish again until this trend line is actually broken. Very much the same way that this trend line was broken here, which set up the sell signal. Does that make sense?
It does.
So this downtrend is going to be in place for a while. It kind of
Okay.
sucks.
Does. And I
And
was just
sadly, of
looking.
course, all the crypto kids, they're like uber bullish right now, which is
Yeah.
kind of a
That's
shame.
how you know.
Okay, so we cleared through the 2.618. I would actually say on balance, it's a good idea. There is a rule of thumb that I think actually was just hit, that I think actually I've taught you before, which I think actually is the right thing to do here. But what did I tell you if you were ever going to take a trade that you probably should shoot for as a good sort of minimum risk reward?
2 to 1.
All right, so let's take this to 2 to 1 and let's see where that actually comes in. So that would actually have you taking profits right there, right on basically a test of this low.
Tails love to be eaten.
Right, excellent, good comment. And remember what we said about this peak up here? Remember we called this totally cheeky. Remember we called this the DFF. Whoops, no, what the hell's going on here?
Do I? Oh, you must have shifted to full screen. You must have held down like command.
Maybe. Wow. All sorts of crazy things are happening here. Let's try. Okay.
You press escape.
Oh, there we go. Okay.
I think you must have done like command F, which must have gone full screen.
All right.
Those
So there's our
hotkeys.
text box, and let's just hit backspace, and we call this the DFF setup, right? And of course, cheeky. Everybody knows what DFF stand for. But and actually, it's funny because I used to work with a pit trader who actually runs a prop firm now, and this was his favorite pit trade setup.
Really?
And we called it the his floor name was Nebraska, and we call it the Nebraska FU setup because trend followers, they are going to be they're going to be buying this W up here, right?
Yep.
But remember we said, how often does the market range?
70 to 80%.
So that means by definition, buying this W here, it's only got about a 20 to 30% chance that the price is actually going to continue on higher, right?
Yeah.
And what 70 to 80% of the time when we come up against the top end of the range, it's going to roll over and it's going to head back down and test the other end of the range. So that's why we call it the FU setup. Because the market's rallying up here. Social media is going crazy. The kids that really don't understand TA, but of course they're newly minted experts, they're all going, man, this is it. We're going to the moon. And then along comes Nebraska, and he's shorting like a madman up here, and he drives the thing back down against the lows. So interesting, if we actually use the time-tested Keep yourself honest. Keep yourself, on the right side of the market. 2-to-1 risk reward ratios. Look how the market here, as soon as it got beyond that 2-to-1, look what's happening here. Right against this low. Is this not
Yeah,
exactly the same thing that we just saw here?
that's beautiful.
Isn't that incredible?
That really is.
So I got a funny feeling we're going to get a DFF setup going the other direction now. Just to piss everybody off who's panic selling down here. So, if
It's so
we.
mathematical. Like
It's
it
crazy,
just
eh?
it really is. It's amazing that.
And actually it's interesting that you say that word because when I'm actually teaching people TA, I actually say that believe it or not, you think by definition you are a trader, and you're a capitalist,
Yeah.
and you're expressing your opinion, and your opinion's so smart. Yeah, that's all a load of horseshit. And actually, most people who actually are professional traders, when you actually ask them, well, what do you think's going to happen? Their automatic knee jerk response is, I don't know. How the fuck should I know?
If I knew I'd be a rich man.
Well, a lot of traders are very rich, don't get me wrong.
Yeah.
But the point here, and maybe you've heard me use the expression before, maybe you haven't. I know Adam definitely has. But I have this expression, and maybe write this down. It might actually, this would be a good quiz question for you.
Oh, I'll star it.
Opinions. What do you think Brian thinks of opinions? Opinions are worth what?
Nothing.
That's right. Someone's opinion to me is completely worthless. Trade setups. What do you think trade setups are worth in Brian's mind?
Everything.
They are priceless.
Priceless. Trades.
So just remember that always. Your opinion, in my opinion, is worth exactly the same amount as my opinion, as Adam's opinion, as Raphael's opinion, and anybody else who's watching this video. Don't mean to be rude, but really, opinions are worthless. Trade setups are priceless. So interestingly enough, remember we talked about how the market went into divergence up top here. You could say shorting against the top end of the range. We know 70-80% of the time markets are going to fail in the top end of the range. So and then, does that Beamish guy say something about shorting M's? Have I ever told you what's the statistical probability that an M, if you shorted it, will actually see like a 2-to-1 objective hit versus the price going up and busting out this high here? Do you know what the statistical probability is?
That doesn't. I don't know. I don't know if you've told me about that.
It's about somewhere between 60 to 70% of the time.
Uh,
That you can take that to the bank. Now, does Brian have some rules about investing? And if so, how many rules?
there's two
Now,
main
what
rules.
is rule number one?
Trade like with an algorithm, and then never risk more than five. Oh, sorry.
Trade with an algorithm. You're heading in the right direction. And what's the key ingredient there?
Your approach.
The algorithm must be accurate at least.
Third. Algorithm must like
You didn't write
accurate.
this down. Tisk, tisk, tisk.
Yeah. Let me see
The algorithm should be right at least 2/3 of the time.
oh yes, if you can be correct to 66%, you're
It
killing it.
should be.
What I have written.
So you should have said that. That is part of rule number
Approach.
1. Now, what did we just say? Is the statistical probability that M's are going to spit out favorable trade results?
That was 60%,
60 to 70%.
70% approach.
Does that sound something along the lines of rule number 1?
Yes.
Now, if we throw in momentum divergence, or maybe indicator confirmation, and we happen to take the M up at the top end of the range, and what did we say the markets usually range a percentage of the time?
70 to 80.
So that means 70 to 80% of the time when we come up against this high and we short it, we're probably going to see the market fade away and test the bottom end of the range. Do you see how when we put all of these ingredients together, we're starting to talk about that algorithm that spits
Yes.
out desirable results 60 to 70% of the time. Does that make sense?
Yes.
So then, by definition, this is where I was going with all of this.
Okay.
What are we actually doing here when we come to the market and we take risk by buying and selling and expecting to make money? What are we actually, when push comes to shove and you want to identify what we actually are, think all of these statistics I've been throwing at you. What are we by definition? I just
Rational
gave you the
investor.
answer. We are statisticians.
Statisticians.
That's
Gotcha.
all we are. And unfortunately, that takes the glamour out of this job. But hey, are you here to be glamorous, or are you here to make money from trading?
Make money from trading. Dollar bills, y'all.
You'd be surprised how many people come to trading, and when they actually realize how boring this job is, and how methodical you must be, and how you must be a statistician, that's really what you're doing here. A lot of people lose interest in this job. It sucks, but hey, I even asked somebody today, would you prefer me to blow smoke up your butt and do the shill and do the, oh man, we're all going to get rich? Or would you rather me just be truthful with you? And would you rather me just tell you honestly what it's going to take to succeed at this game?
I would rather have you be honest than just feeding me a load of baloney.
Tell you, the sad part about it is the honest guy, he gets no likes, no views. Nobody really, calls him a rock star, because if I'm looking to be right 60 to 70% of the time, then by definition, how often am I going to be wrong?
Like only a third?
Well, not only.
Yeah.
I mean, literally, just do the exact opposite numbers.
Yeah.
So literally, that's somewhere between
20,
30 to 40% of the time.
Yeah.
I'm wrong. And because of that, you're not going to sell a lot of newsletters. I mean, that's the brutal reality of a trader's life. And, when you go on to like professional prop firms and stuff like that, they will tell you, like a typical floor trader has to trade every single day. They're shooting to be right only like 55% of the time. But remember, I explained this to you in previous episodes. The key is when you're right, what has to happen relative to when you're wrong.
You have to be right more than you're wrong.
No.
Oh.
In fact, you can actually, in this game, if you play the game correctly, you can be wrong
more
than you're right, and you're actually profitable.
Yeah.
So let's rephrase this. Sounds to me like you got some more writing to do. So, what is the key to this game? What do you absolutely have to make sure of? When you're right, what has to happen relative to when you're wrong?
Only have to be right 33% of the time when you're trading 2 to 1.
The 2 to 1 is the key here, Joe. And
Yeah.
in fact, I need you to like memorize this and you have to regurgitate this on
Okay.
command. So, first, bark like a dog.
Rough.
Thank you. Second, to be a successful trader, thank you, Adam. He said the answer.
Oh, get paid.
You have, and I want to hear these words come out of your mouth. You have to get paid for your efforts. And then somebody says, well, what does that mean? And then you say that when you're right, you get paid at least twice as much as when you're wrong. I gotta tell you, there's some guy, you could literally teach a course just off of this one image on the screen right here. You could literally teach an entire course. Because I guarantee you, there are noobs that are coming in and selling these lows here. And you can even see now they're already regretting their decision. And what did we say I'll make it easy for you, right? Because I've been such a dick here, sorry.
No, you haven't.
Where are these guys who bought here?
Sleeping on the
Where are
couch.
All right, you know this one. Where are these guys sleeping that sold here?
That's sold there.
Same
Sleeping on
thing.
the couch.
Sleeping on the couch. Do you see how these guys are actually they're literally taking their pillows off of the bed and they're walking down to the couch as we speak by them panic selling down here.
They're going even farther. They're going to the dog's bed.
And they're not even gonna get the
Not
couch,
even getting the
right?
couch.
They're gonna get the fucking doghouse.
Yeah.
So, do you see how the people who panic bought Mr. DFF's
Yeah.
FU move up top here? Where were they sleeping?
The Doge house, as Cole said.
Well said, Cole. Well said. Hey, Cole, we need for you to come on and give us a astrology update, please. And
I'd
oh,
love
by the
that.
way, Cole told us 6 months ago that the crap was going to hit the fan this fall because of the astrology. And
Interesting.
remember our Bitcoin weekly chart? Should we be bullish? Should we be like going and betting the farm on the long side in Bitcoin right now?
No.
Right? If anything, you want not only this to start painting bullish divergences, but you want Cole to say, all right, the skies are clear, we're okay. And unfortunately, I can guarantee you, Cole right now is not overly enthusiastic about what's coming down the pike here in October. Right, Cole? Anyway, I'll let him validate that. All right, so the point of the matter here is I think that we had a DFF, nice, in years gone by, we'd call this a Nebraska FU setup. We had a gentleman who was on the site years ago. I can't believe I've been doing this for 10 years now with you guys. Man,
Yeah.
a whole decade has slipped by. It's remarkable. Anyway, she's about 7 or 8 years ago, he was on the site. We called it the SFU, Sebastian FU setup. Then we have one guy who's actually active in our day trader room, and he trades futures contracts. And just to give you an idea, in the futures industry, since Coinigy doesn't do futures, I can show you a trading view chart in the futures market. But I
Hmm.
basically did this exact same trade in the crude oil market today. And there's my trade. It's literally exactly the same trade. Can you see the big M top? Up, down, up, breakdown. And I shorted that M.
Okay.
And then the Foggenbaum constant. So I drew off of here this tutorial that I did for you guys. Where are we here? It's one of these fog and bombs. Oh yeah, so there to there. Can you see it? First off, can you see the M?
Yes, I
Right.
can.
So the big M is up, down, up, fail. So I tried to get short off of that level. Draw my fog and bombs. So that's this study off of the high, back down to the low. And I took profits at the 2.618. And actually, you can see there was the entry and there was the take profit. Right? You can even see the trade right on the screen.
Yeah.
So this is exactly the same thing. And for all the site participants, I was more than happy to suggest that on this trade in particular, because where the fog and bomb study was, I was more than happy to suggest, maybe take some profits heading into this level here. If you had been like, well, Brian, you told me only to take profits at 2 to 1. Well, you got paid, so way to go. That turns out that worked as well. But the point here is, can you see that it's exactly the same logic? No difference.
Okay.
And how often we say M's produce desirable 2 to 1 risk reward matrix?
That was we got 60 to 70%.
And what's Brian's first rule of investing?
Your first rule of investing is trade with an algorithmic approach that has to be correct 2/3 of the time.
So does 2/3 fall into that 60 to 70% window?
Yes.
All right. And then if we add divergence and we add trade location, I think you can comfortably get into that 66% window.
Yes.
Okay. So I wanted to show you this. This is a really good example of how you can use the Coinigy platform and all the concepts that we teach at TRI. Oh, I failed to mention, I sort of mentioned it. So somebody was like, what about that futures trader guy? So it turns out that every single day in the futures pit, we have a day trading room at TRI. We call it the battle stations room. And Craig is in there trading this setup every single day. And it's just beautiful watching him in action. He is a professional futures trader that trades the CFU setup because it's his brand and he has a very specific sort of spin to the trade setup, and it's beautiful watching him in action. And he literally does this kind of trade setup off of like a 9-minute chart off of the stock market.
Interesting.
Isn't that cool?
That's very cool.
And the great part about the universe is it is by definition a fractal. Remember our Canadian flag concept? The universe is a fractal, so it doesn't really matter if we're looking at a weekly price chart and applying these concepts. They're just the investors use the weekly charts, or whether it's in this particular case, I think this is a really good example of a swing trader uses the 4-hour charts. Or, like I said, Craig, he actually uses what's called a tick chart, and it's actually a specific number of ticks that make up his chart. I won't go into that here with you guys. Maybe we can talk about that another day if you're really interested. But the point of the matter here is, because the universe is a fractal, it's just really a question of whatever time frame is directly related to what type of trader or investor you are. Investors use higher time frame charts, same logic. The sort of position trader uses daily charts. The swing trader uses like 4-hour, 6-hour charts. The day trader uses like 10-minute charts. That's it.
Okay.
And it's exactly the same concepts. It's just really a question of what time frame you use. Make sense?
Oh, yeah, it does.
So, really good application. Everything that we teach you guys on the site. I like to, when people say, well, what do you think about this name? What do you think about that name? I'm going to always start at the highest time frame. I always want to start with the investors, right? And 90% of the people that are watching this video, my hunch is they are like a little old lady risk taker. They're going to want to buy something. Hey, this guy said this was a pretty good idea. So I always like to start with sort of their investors. But people like Adam now is he has got a buddy of his. They're both out of California. I suppose we won't hold that against them. But they're day trading. In fact, actually, his buddy is trying to get funded with my old prop firm right now and jumping
Cool.
through their hoops. Adam, actually, not only is an excellent crypto trader, Adam, I think, is actually going to make his fortune spread trading options contracts in the stock market, which actually we can even do options in the cryptocurrency market now. And actually, Coinbase was just listed as a official futures merchant. So technically, in fact, actually, we were talking about accounts and places that you should get set up. I think it would behoove you, considering we're going to use this as a demonstration. We probably want to demonstrate things like Bitcoin futures trading down the road, and
That'd be awesome.
Coinbase has basically been labeled as the officially acceptable place by the U.S. regulators for you to trade futures contracts down in the States.
Cool.
So
Yeah.
I think it would behoove you
We'll
to
look
get
into
set
that.
up on Coinbase.
Yeah, I've got a Coinbase account, so
All right.
um,
So I
yeah,
think it's settled. We've just agreed you are now going to go Coinbase.
cool. I did not hear that about Coinbase. Adam just said he read that today, so I'll have
Yeah.
to dig into that a little more. That's super interesting stuff.
Well, and it's really interesting because I used to trade for a prop firm a million years ago.
Yeah.
And the guy who runs the place, he's an old gnarly pit trader. He's been trading on the CME, back when it existed forever. Oh, and Coinbase is in Canada now too. Oh, thank you, Adam. I didn't realize that. So I should probably get myself set up there as well.
Huh.
So,
Yeah, that's awesome.
for,
Coinbase secures approval to bring federally regulated crypto futures trading to eligible U.S. customers.
right.
It goes,
So the point that I would just make with regard to that is most of the higher ups didn't really believe in Bitcoin. And John, my old boss over there at Top Step, he used to call them beach balls. Oh, you're trading those damn beach balls, Beamish. But now, mysteriously, you could trade Bitcoin futures on Top Step. So Bitcoin is now legit, and I would strongly suggest that maybe we even do like Bitcoin analysis off the CME contracts on this show as well.
that'd be awesome.
So ask your higher ups whether they have plans to track the Bitcoin futures on CME.
I do know we have plans for chart like for actual stocks and stuff because we are owned by Lightspeed Financial or lightspeed.com.
All right.
Just stock tradings and equities trading platform. So that is in the works too. So
All right. So what do you think,
exciting stuff in
everybody?
the pipeline.
Oh, sorry.
No, that's it.
What do you think, everybody? Was that Adam? I mean, Adam. I think he would like. If I probably sat here and swore for an hour, he'd like it. Cool. I think also too. He's a TRI. Raphael, are you part of TRI? I can't remember if I know you or not. And
It's
anybody
funny.
else? There's 9 people. Did anybody get any good value out of that lecture there? Because I did spend quite a bit of time
I
going
for
through
one
this.
did.
Did you, Joe? Did you?
I got a full list of new notes on here. So
Excellent.
yeah, I did that.
Okay.
I'll have to transfer all these into my notebook. It's funny. My
Okay,
dog
so
been started listening right here.
to finish off this thought, since we are now doing a range kind of conversation, what is it that I'm going to need to see here since we do have the bottom end of the range? We are technically in trade location. What is it I'm going to need to see here to actually start thinking about buying? Hey,
You need
Constantine, nice to see you.
you need a W on
Oh, before that,
uh
how does the 3 steps go?
location.
Look at your notes. Yeah, if you need to. This is
So
critical, Joe. You
yeah,
need to. You literally need to recite this kind of shit in your sleep.
I mean, I already talk in my sleep, so at
Okay.
least let my girlfriend hear
That would be,
something.
oh, whoops.
At least let my girlfriend learn something when she's hearing me snore.
Oh, did it again. Damn it. Why is it doing that?
No, like
Okay, let's go here and then go like that. All right. Okay, so we'll do it again and we'll just keep doing it until you spit this stuff out on command.
3 reasons. So it's location,
All right, and so we'll go one, location, and
trade,
we can
or
say yes right now, right?
yep,
All
and
right,
then
so what was number two?
indicator confirmation for
Okay, indicator
divergence.
confirmation. And why don't we leave that blank for now? And then three was,
Market structure to frame
all
an
right,
entry.
market structure, or you could say price structure. It doesn't really matter. Uh, market structure is going to be the fancy guys that really want to look fancy schmancy when they're talking to you, and sell you a course for $10,000.
Funny. I even on my notes it says market and then in parentheses price.
Okay.
So to frame an entry.
The guys who are going to try and teach you for free, they're just going to say price structure. So, where are we in the process of maybe I want to buy this and take a shot on this DFF? So, we've got location.
Yeah.
Do we have
Now,
indicator confirmation yet? Let's take a look at our indicators. What did we say? Volume. Do we have any indication that
no,
the buyers are in control volume wise?
no, sellers are.
Nope. So nothing out of the volume analysis. How about the price analysis? Did we say RSI is Wing out through the 50 line?
No, not yet.
Not even remotely.
Nope.
And is MACD in bullish divergence? Do we have any W's here?
No.
No. So that means indicator confirmation. What do we have to put in here? A big fat
No.
no. So because we don't even have indicator confirmation yet, can we even get to step 3 yet?
No.
So we can't even put anything
Put
in here.
X. Or no,
Okay,
that
we can
means
even
Twitter
say
now.
can't even consider. And that's where we are right now.
Flip that one.
So the problem, and the question here is, do you fancy yourself a, well, no, that's not the right one. How are we going to say this? A sign of a really, really good trader is, actually, there's an expression. So I want you to write down in your notes, and everybody watching this do exactly the same damn thing. What is the sign of a good trader? Like, that this guy or girl or houseplant in this stupid world. This entity. I think that's the only way we could say it, right?
Mm-hmm.
Really knows their shit. Really knows what they're doing. And this is the expression I want you to write down, and you got to be able to regurgitate this as well. And
Okay.
everybody watching this, write this in your journals. Sign of a good trader is they cut their losers, but they let their winners what?
Up there. Losers.
And there's always that, Cole. Cole, you never told us about what's coming down the pike here in October. Yeah, I mean, you want to get really advanced.
They let their uh they let
Did you write down word for word what I said there?
the sign of a good trader is they cut their losers but let their winners blank
What are they saying?
run.
That's what I want you to write down. Do you understand that? They let their
Yes.
winners run.
Yes.
And in fact, actually, one of the One of the reasons why the prop firm that I worked with fell in love with me so much was because when I was with them, I used to not only ride my positions, but I would actually add to the trade. As the trade was working, I would actually, like in this particular case, maybe I shorted this M, and then on this failure here, I would go and short some more. And then on this failure here, remember our RSI, big honking crazy ass signal, I would
Yeah.
go and short more, right? So a really good sign of a good trader is not only to take, some partial profits at, 2 to 1s, make sure that your winners pay more than your losers, but maybe you don't need to sell everything here at this 2 to 1.
Okay.
Maybe what you do is you only sell half of it. Book the profit on half of the position, and then maybe just move your stop loss to break even on the rest of it. And
So,
who knows? I mean, you heard me talking about this weekly chart. According to this weekly chart, my price objectives here should be, because it looks like we're losing this 13 EMA, right?
yeah.
So my price objective should be a test of this 20 EMA, or what is it, 30 EMA, beg your pardon. So do you see how if I just walked away and took total profits here, I might be leaving a ton of profits on the table.
Yeah.
And then do you remember what I said? Let's see, I'm testing you tonight, aren't I?
Yeah.
If we start to
Okay.
see the market roll over and
Okay.
sorry?
Okay. I'm just following around saying, okay. Let's,
And we start to see it moving down, what should we do? 2 words, both start with the same letter, thinking about where the market might stop actually heading down. What were those 2 letters?
uh,
2 words. I already
V
gave you the
top,
letter.
V top, and V bottom.
No, that's not 2 words that start with the same letter.
V top and V bottom are both 2 words. Let's start with it.
So V is a V and top is a T.
Oh
V
yeah.
bottom would be
Oh
V and B, so
yeah.
those aren't the same letters.
Look left.
Adam's,
Ironically, my I
you
my
get the
screen is
impression
to the
I've
left
done
here,
this with
so I am
Adam.
looking left for the answer. But it's
So if we're going to look left, do you remember I started off this conversation with you? I said that I thought that this top looked like
the
what
head and
pattern?
shoulders.
So by definition, if this is a head and shoulders, then that means that the neckline, the price has to come all the way back down here, right?
Yeah.
Look left.
Yeah.
That's that low there. So maybe the price doesn't stop at the 30 SMA. Maybe the price has to go all the way down here.
Okay.
So what's that number? That's 24,700.
Yeah. So you're
Let's go
leaving
back to our
me on the
4 hour
table.
chart. I mean, that implies that maybe, oh, well, look at that. 8.77 sitting there at 25,900. So maybe it's not in your best interest to take total profits here. Maybe it's in your best interest to only sell half. Put your stop at scratch on the rest. And then if you do start to see all these reasons come in to just justify going long, that's when you take the rest of the short off. Does that make sense?
It does.
That's the sign of a really good trader. So I might actually argue that it's not a bad idea to be short here and just actually my old boss, that John guy, he used to always say to me every single day. And actually, this is another one that I think you should probably write down. I don't, to be perfectly honest with you, maybe I'll be surprised. I don't know. But I don't think, I mean, you've already got a career going here. Maybe you're going to be president of Coinigy one day. I don't know.
Okay.
But if you ever do want to be a day trader,
Yeah.
and this would be a pretty good example. This would be a swing trade, but day traders, they'd be on lower time frames. There's actually a funny expression, and maybe write this down in your notes. Um, what is your job actually as a day trader? The irony of it all is your job as a day trader. Remember, I showed you that crude oil short trade?
Yeah.
And actually, you can even see here, I took one long here earlier on this morning because we were right down at the bottom end of the range, blah, 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 everything that I talked to you about, right?
What
This
time
got,
frame is this
this
on?
is a 3 minute chart.
Yeah. Okay.
So that's what a day trader's life is. You're down on these really low time frame charts. So I got stopped out here on this trade, but it turns out this trade worked. So you can see I was minus 28 on one, plus 104 on another. So the end of the day, up 76 ticks on the day, which isn't bad. I can live with that.
Yeah.
So point of the matter here is this is a typical day trader's life. I don't know whether you want to be a day trader or not. Maybe you do, maybe you don't. But really good analogy and a great thing for you to remember for the rest of your life. A day trader gets paid to be uncomfortable. That's how a day trader makes a living. You are paid, kind of like this trade up here. What do you think the easy trade to do was when the market was just screaming up here? What do you think the easy trade was to do?
Take your profits.
No.
No.
The easy trade. I mean, next time you see Bitcoin going through one of these insane rallies, pull up social media and it'll be really obvious
Oh,
what the
buy.
easy trade to do is. It's to buy.
In. Yeah. So
It's to
everyone.
get wrapped up in the fucking euphoria. We're all gonna get rich and just go and buy. It's so easy.
Yep.
In fact, actually, there was an old student of mine, and I got very cross at him because it turns out that he's a very big social media influencer. And it just proved that he did not respect anything that I taught him. Because at this point, right up here, the jerk was on social media saying, don't worry about TA, because at this point, look at what RSI was doing through here. Holy crap. Do you see how RSI
Yeah.
through
Oh
here
yeah.
was saying, what the fuck are you doing buying, you stupid idiots?
Yeah.
And this gentleman went on social media and he has like millions of followers and he has like newsletters. And of course, he gets paid when all of the circle jerkers all orgasm over him saying they're going to get rich. Gold stakes. That's
Yeah.
right, Cole. Right? We used to make fun that these guys would go over to Dubai and they're eating gold-plated steaks, the assholes, just throwing money away like they don't even give a shit about money. That's why I hate social media. This thing is a fucking cancer on our society.
For
So
sure.
he was going out saying, don't worry about TA. Don't listen to your indicators that are telling you you're an idiot for buying. Just go and buy and you'll get rich. And it was the easy trade to do. But you tell me, how did that work?
Went way down.
It was a disaster.
Yeah, that was
And the
a
sad thing
rough
is
time.
if he was a licensed broker in the States and he had said that, he would have been sued up the fucking ass, and all of his gold stakes that he can afford to buy now and all of his wonderful Bitcoin that he mined at nothing would have been taken away from him in an instant by a judge.
That. Yep. It's a
So that,
sad reality of it.
well, the sad reality of crypto is that it's an unregulated market. So
Yeah.
social media can come on, make really, really horrible commentary. Do I need to remind you about my favorite billionaire?
Alan?
Yeah. And this idiocy, like, how on earth did this? Oh, we can't show you here. You all know how
Yeah,
I feel. So
we know
let's not
how.
open up that can of worms again. It's my job as a responsible educator and somebody who actually is fearful of regulators coming along and stealing my lunch, right? I
Yeah.
cannot, in good consciousness, look at this chart and say, yeah, go buy Bitcoin, you'll do fine. You're going to get killed here.
Stomped out and sleep on the couch.
Yeah, well, and the sad thing is you can see where are these people sleeping right now? Right there.
Oh, on the
It's
couch.
it's just stunningly cliche how this shit works, eh?
Yep.
It's the same shit, just different pile. Okay, so back to our story. Um, the point of the matter here is we're in half decent trade location. Let's start seeing things like the indicators actually start spitting up bullish divergence. Let's start seeing things like W's coming in on price following that. Then we can think about actually buying. But for the time being, I actually don't mind the idea that people are short. They've just paid themselves, whether you paid yourself at 1.5 to 1, which was sort of my recommendation on the site when I was talking to people, just basically cover coming into these lows. But if
Okay.
you had it at 2 to 1, that's fine. It's, hey, you got paid. Awesome. Nothing wrong with that at all. And sadly, you can honestly see the people who are shorting down here, they're already starting to make their beds on the couch. It's
Yeah.
almost laughable how cliche this stuff is, right? Remarkable.
Yeah, it really is.
All right. Hope everybody got a really, really good lesson tonight. And,
Yeah.
all of you people, please, the way that we get the message out is we need you to comment on these videos. We need you to hit the like button. I mean, I see 10 people
Yeah.
watching, but only 6 likes. Can all of you please hit the like button if you actually went, wow, this is something I've never heard before. Wow, who is this guy? He's actually trying to help us become
Makes a
better
world of
traders.
difference.
You know, if you look at Joe and you go, geez, he's a handsome guy. Can you please hit the like button? I mean,
Wait,
come
hold
on.
on. One second.
I'm just
I have
being
a dog
silly.
here. Do it for the dog.
Hey, where'd the dog? Oh, you got a doggy. Oh, bring the doggy on. The dog. Hey, there's a dog. Hi,
Yeah.
doggy. What's the
Do it for
doggy's
the
name?
dog.
What's your dog's name?
This is Macosta. He's been
Macosta. Hey, buddy.
coming in here asking for attention all day.
All right.
But
Do it for the dog, please.
yes, do
Actually,
it for
look
the
at we just
dog.
lost 2 viewers. Oh well.
You don't like dogs. But all right. Well,
Then we just
Brian.
lost another viewer. Isn't that funny how that happens?
That's funny. We got 2 likes out of it. But thank you for everything, Brian. As always, another amazing show, a lot of information. And as he said to everyone out there, please like the video, comment on it, let us know your thoughts if there's anything you want to see moving forward, or if there's other coins that you want us to talk about. So with that, best of luck tomorrow, Brian. And
Thank you, sir. With Liam, thank you for the
yes,
best
sir.
wishes, everybody. Thank you, Adam. I appreciate it.
And we will see you guys next week. Goodbye for now.
Bye for now.